Good afternoon and welcome to the LPA Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and could be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Philo Daniel Tran, CEO. Good afternoon.
Good afternoon. Thank you, Lily. Good afternoon, everyone. Thank you for joining. I assume everyone's joining from the UK, so afternoon, but if you're somewhere else in the world, thank you for joining us. I'll just get stuck right into it. So starting off with the board, I have been with LPA now for just over a year. It has been a really exciting and interesting journey within LPA, so I will touch a little bit more on that in the detail through the course of this presentation. But I joined from Smiths Detection prior to LPA, where I was a global director for aviation and urban security. Prior to that, I spent quite a lot of a decade and a half with Thales in roles, regional roles across Australia, South Asia, as well as in the UK. And I was brought in because the board wanted to understand how can we turn this really well-invested company into a more profitable company. And over the last couple of years, it hadn't actually delivered results as expected. So we are on that growth journey, and I'll talk on it a little bit more, but I'll hand over to Stuart to introduce himself first.
Hi, good afternoon, everyone. So Stuart Stanyard. I've actually been with LPA for 3 years now. Prior to that, I worked predominantly for Rolls-Royce Civil Aerospace in customer business for over 20 years. I've also worked in private equity and worked in the UK and overseas.
I'll just touch quickly, thanks Stuart. I'll also touch a little bit on our board. We have our chairman, Robert, who is well known for turning around top-tier listed companies in terms of returning the business to profitability. We have Andrew Jenner, who is currently the CFO of Patena, and he's got plenty of experience in FTSE companies, and Gordon Wakeford, who was formerly the CEO of Siemens Mobility. So a really high caliber board that we are able to work with, who are 100% behind the strategy and the vision that I have set out to drive LPA forwards to profitable growth. So we'd like to share a little bit more about that today. So who are LPA? So a number of you would have probably known LPA over the years. Some of you might have come into this meeting quite new, not knowing who LPA are. So we are an innovation-led engineering company. We're a manufacturing company delivering to our rail, aviation, aerospace and defense and industrial markets. We provide solutions, products and services. In terms of solutions, this is not the entire list of everything we do, but just to give you a flavor, we deliver intercar rail jumpers and electrical boxes, not just to the UK, but to some of our global customers as well. Electronics and lighting, we do not just the lighting within an interiors of a railway train, we also deliver a whole range of electronics, including seats and other electronics as well. We also offer space and weight saving capabilities to the aerospace and defense sector, as well as rail, largely from our value add distribution part of the business, but we are now leveraging the wider group capabilities to offer bigger, wider capable solutions to our customers. In terms of products, we acquired Martech Power from Eaton last year. So the power converters can be offered as a solution, but also as a product. We have our oldest connectors, which are the knife fan connectors. We also have our aviation ground power solutions, Redbox, which we acquired 1.5 years ago. We've also got the leading plane power connectors to power up large jets. We've also got our cable carrier systems. So a range of different products that customers can buy from LPA. And then, of course, a lot of these contracts, particularly for the solutions, are long-term contracts. They are 20, 30, 40-year contracts with the customers. Of course, they need spares. Of course, they need a midlife upgrade. And we are there along with our partnerships with our customers and our distributors to work with them to ensure that we can sustain the life of that, the train or the plane or whatever it is that we're supplying our solutions for. And we do this out of our 4 different sites within the UK. We have 2 large manufacturing sites, 1 testing and assembly site, and we have a German office, and we largely work with either directly with our international customers or via our distributors. And I think what we need to take away from this is that we are a small to medium enterprise in the UK that are delivering to our global customers in over 50 countries. We have really well established manufacturing capabilities and engineering and technical capabilities in the UK, and are able to deliver to such a large array of countries across all of our market segments. And if I just, across all of our market segments there. So in terms of customers, we have a growing list of top tier customers globally. So a lot of these customers you would know, for those of you who've seen these slides before, you would recognize a lot of them. Yes, we are continuing to work with our existing customers, but we have also added a whole range of new customers there as well. You'll notice NS in the top left, in the bottom left corner, you'll see Boda, and these were contracts that we built and developed over last year. You'll also see the likes of under aviation, you'll see the likes of Dynel and ITW, some discussions going on with Boeing. You'll also see aerospace and defense. So whilst we're continuing to work with the traditional defense-based customers, the UK has a growing commercial aerospace market, and we are well embedded within each of those contracts. And you will see some more news and announcements coming from LPA during the course of this year, with the likes of Vertical, Hill maybe a little bit later, and Zero Avia and others. And with industrial, there are customers like Hubble that we have reignited the opportunities with, that we're starting to see further growth in those, and then HS2 as well, which we are doing some amounts of work with the industrial part of our connectors. So let me just give you a flavor of some of the key recent highlights. So One LPA Group, it's not just a tagline, it is a reality. I started in the reorganization very soon after I started, because what I inherited was 3 separate siloed divisions within the company that were not really talking together. There was no resilience, and that's what we needed as a business. I really wanted to ensure that we structure in the right way so that we are able to drive and deliver the accelerated growth that we wanted to achieve for the company. So with that, the divisional structure was removed, which I did speak about last year. Change happens overnight, but the transition and the transformation does take time. And if you want to do it correctly, you do it slowly. And that's the journey we've been on. So together with the Martech acquisition, I would say I ended up with 4 divisions, 4 sites working independently that we've been working very hard at integrating with, and the organization is now driven by functional heads and functional directors reporting directly to me. So we have a new operations and supply chain director, we have a new sales and marketing director, we have a new technical and engineering director. Together with the CFO, we're working together to make sure that we can leverage the capabilities group-wide to absolutely deliver on the vision that we set out very early on, sort of February last year, and we are in the progress of, and we solidified the strategy in July, which the board agreed to, and then we're delivering on that now. We also agreed to consolidate some of our manufacturing sites following the investor presentations last year, and where we actually merged one of the smaller sites into one of our larger sites. So those operational efficiencies are starting to come to fruition, and we're professionalizing it a little bit more. The focus has been very much about customer-centric new product innovation. Over the years, in recent times, I suppose since COVID, the emphasis on innovation has been less so. So whilst we have reorganized, the drive has been to rationalize our existing product lines. We've got clear product roadmaps. We've got clear understanding of this is the innovation that we can do for our customers to answer their needs or their pain points. And that is happening today. It is not for tomorrow. We are innovating and delivering new solutions to customers today. And you will see some launched as new products, but some of it are improvements to our, if we have the best plain power connector, we don't want a competitor to come and take that away from us. So we have ensured that we have reassessed it, re-engineered every single bit of it to make it the best product for it to maintain that leading position in the marketplace. So yes, you will see some new product introduction and launches coming up soon. Rebalancing the business with a more diversified revenue mix. You've all been tired of hearing the project has slipped, so the numbers won't be met this year. We need to get away from that. So what we've done is, whilst we absolutely need those large rail or aerospace contracts, we also need lots of smaller contracts to fill up our pipeline and our funnel. So you might say, well, there was no news from LPA for most of last year. Yes, we've been really busy, but we've been building on the pipeline. And Stuart will touch on that shortly. We had a record order intake, but we didn't get the opportunity because of the small revenue mix coming through to announce it to the market. And you'll get a little bit of a flavor of that. We're also ensuring that whilst we want to get new customers, we also want to ensure that we build on the legacy of our existing customers, our existing distributors, to ensure that they're still delivering for LPA. And then ensuring that we bring on new distributors if the ones that we don't, either to fill in a gap, or if the existing ones aren't really the right ambassadors for LPA moving forward. We can't do all of this without the right certifications. And we have a range of different certifications to ensure we can deliver quality to each of our customer bases. So the IRIS certification, we got recertified last year. The number we got, it was towards the end of last year. We got to a higher level than what we had previously. So that's a big tick in the box. 9100, 9120, we had audits again towards the end of last year. 9100 has been closed up. 9120, the team is very close to closing out those open actions there. 9001 audits happening for one of the sites this week as well. So this is a continuous work in progress, areas of improvement, and we are maintaining, we're improving, and that's great. And I suppose with the refinancing, I'm going to hand over to Stuart so he can actually take you through the process that we went through and what a success it's been.
Okay, thank you, Philo. So the refinancing, we're very pleased to have concluded in mid-January this year. I trust you've seen that. This was a very competitive process. We had lots of interested parties, and the prime reasons for us refinancing the banking facilities is to relieve short-term pressures on working capital due to different timings on receivables, and to support our growth in the medium to long term. I'm really pleased to have secured this with Arthbotnot, and I look forward to working with them going forward. It's a 3-year revolving credit facility. Moving on to recent contract wins, as Philo alluded to, we had a record order intake during the last financial year. You can see here a large number of smallish orders that we won, which wouldn't be announceable in their own right, but you can clearly see they're spread across the industrial side, the rail side, the aviation, and aerospace and defence. Coming to now the key financial highlights, key takeaways from this slide here really are the order intake of 28.8 million. The previous year it was 17 million, so we're really pleased with that, and that shows that our customers have faith and confidence in our growth and our future. This leads to an open order book as at the end of September 32.5, which is pretty close to our record order book there. As Philo alluded to, overall the year of FY25 was that of transition, and we had some project delays, which meant that the revenue wasn't as great as what we thought it was going to be. Having said that, you will see the guidance put out is around 27 million for our revenue this year, which is a 25% increase on what we did last year. And I'm pleased to say that at the end of our Q1, we're already well in line with that. And we actually had, for the first time in 4 years, a profitable Q1. So we are very confident in both achieving the revenue numbers and the profit forecasts that are out there. Moving on to a little bit more detail on the revenue breakdown, 3 charts here. Looking on the left-hand side, key takeaways, rail still remains the largest proportion at 66%. It is down from 69%. It will always be in the 60s at the moment. Key takeaway is that aerospace, aviation, defence is now 28% of revenue. Previous year it was 25. The 2 years prior to that it was 13 and 20. So over the last 3 years we really have been improving in that area. Revenue by segment is pretty stable, to be fair, with the value add business 25 and the balance split between the other 2 businesses. And then we're also very pleased with the fact that the improvement in our Europe and the rest of the world revenue has increased to 47% from 41%. From a little bit more analysis of the order book, as Philo alluded to, the projects spread over a number of years, as you can see on the right-hand chart there. On the left-hand chart, that shows most of the projects, for example, the refurbishment of the London Underground lines, are primarily in the lighting business. That's where most of the order book is, and then that's spread over 4 years plus. Moving to the income statement, key takeaways, as I've just touched on, are the strong increase in order entry over the year last year, and also the follow-on impact on the order book. On the balance sheet, 2 key takeaways here are the freehold property. We got those valued as part of our refinancing exercise. So that's 5.4 million. They're at a net book value of about 3.6 in the tangible assets there. And then the pension entry there is a defined benefit pension. That is net of a 25% tax we've got there. That scheme was closed 25 years ago. There's about 110 people in it. And that is a surplus. It's 133% funded. So very unusual, but that is a strong asset that we have in the balance sheet. We don't propose to hold that forever, but at the moment we believe it's the right thing to hold as we move forward. And looking at future government legislation to relieve, to assist with pension surpluses, we'd be looking to potentially source some funds out of that in due course when the legislation allows us to do so. The other point on there to note would be the net working capital, which I'll come on to now, the increase of 1.2. I'll come on to that in the cash flow. So again, you can see the change in working capital here, negative 1.2. That's primarily a change in receivables due to different timings of receivables from key customers. And that is one of the reasons, as I touched on earlier, in terms of the refinancing, we need to smooth those out, which the refinance will enable us to do. And I think that goes back to you, Philo.
That comes back to me. Right, thanks, Stuart. Okay, so let me just, we've spoken a little bit about what we've done and what we're doing collectively as a team, and how do we sit and how are we placed within the market. LPA has a lot of strengths, and what is our USP, everyone says? It is really our agility. It's our capability with our in-house design and manufacture. We're able to take a customer's pain point, engineer it, prototype it, test it, and very quickly change the manufacturing because we've got that all in-house. And that is a USP in terms of being able to quickly respond to the customer. Vertical integration, yes, that is a strength as well, because that is a requirement for some of our customers that they need a UK-based production, manufacturing done here. We've got a long history. Our brand reputation, and the legacy is something that we need to leverage because we have a good global install base that we want to continue to grow as well. So lots of strengths. In terms of, if I look at the weaknesses and threats, I've put historic against a lot of those because I think we were restrained a little bit by the way we were constructed in terms of organizationally. We've been weak commercially. So how are we managing that? We are starting to push back to customers. We're not just taking what they give us. We need to be firm and clear in terms of, we know what we're good at, we know what we can deliver, and we need to ensure we get the right margins. Yes, when there is competitive tenders, we need to be competitive, and depending on if it's strategic or not, we can then bid accordingly. But in terms of contracts slipping to the right, etc., we have started really reassessing it. We've got new people within the organization that are reassessing what the contracts are, historical as well as new, to ensure that we are protecting LPA. In terms of, I suppose with that then comes diversification in the fact of, we will be looking at more recurring revenue contracts, more work in areas where the money is, where the investment is, and getting the support from either local or international firms that will allow us to grow there. And really, letting the customers know that it's a total cost of ownership. It's a low total cost of ownership. So whilst they might feel like they're paying more today, the reliable, good products that they get out of LPA means that they would not need to replace it as often. So they need to be looking at the overall life cycle of a product. And the quick development cycle. I've spoken about innovation and the innovation pipeline and the roadmaps that we've developed through the course of last year. We should be in a position to release products this year, and that is what we're working towards. And I think our agility and our ability to design and quickly manufacture and deploy is a strength, and we will continue to leverage that and ensure that we make more of that, and it becomes more opportunistic there. I think so we have a couple of case studies. I think, Stuart, we're going to do a tag team on this. I'll do so we'll do a couple. We can talk more about it later if you have any further questions, but I'll just give you a little bit of a sense of it. So the first one is really a customer relationship and our partnership with Grammar. So Grammar is a seat manufacturing German-based company. And this contract was over a €5 million contract that we won a couple of years ago, which we're well into delivering. But I just wanted to give you a flavor of what happened and why was this important. So LPA, whilst Grammar didn't really understand the French regulations, they hadn't worked with SNCF and the French National Rail Network, but LPA had over a decade of experience working French rail industry. So what did we do? We brought a decade-long specialized French rail expertise to the partnership, having worked with French seat manufacturers as well as with the end customer as well, which is SNCF. The depth of knowledge that LPA brought was really the intimate knowledge of the above European norm requirements that the French railways required, and really understanding the in-depth technical and requirement specifications that SNCF imposed on this contract. So that depth of knowledge was absolutely critical in elevating Grammar's position as a credible contender for this project. So it was all, the crucial part was the reliability and compliance were absolutely not negotiable. So together, we managed to help Grammar secure this, and we are obviously supplying to Grammar, and we are delivering on one of Europe's most demanding rail projects. So it's a really good success story for LPA in terms of our export that we're doing out of the UK. What is the scope of this? We are supplying reading lights, underseat ambient lights, power sockets, USBs, the complete interconnection harnesses, table lights, chargers, all sorts of things. So quite a big scope, and we've got a couple more years left for it, but well underway at the moment. I think I'm going to hand over to Stuart on that.
Thank you, Fido. So second case study, we're going to talk about the aviation sector and delivering product innovation there. So Glasgow Airport, for those of you who don't know, is the second largest airport in Scotland and the 9th biggest in the UK. When aircraft land, the key is to switch the engine off as soon as they can regarding noise and pollution. So they need ground power. This is what we do here. What you can see in the picture there is what we call a croc. That delivers the power to the plane to enable its avionics, cabin systems, etc., to function without the engine on. So Glasgow Airport have been a customer for a while. They had 10 crocodiles for their 12 stations, and that was all going fine. A few years later, they ordered a competitor crocodile, and actually it was a couple of years after that they came back to us because the replacement ones they'd ordered were actually corroded. So Glasgow Airport now have our latest plane power crocodiles, and the key reason why ours are pretty good is because Glasgow Airport is situated on the Clyde. The sea air with the aviation fuel creates a sort of a toxic, corrosive environment, and our crocodiles are made of aluminium. They are very lightweight, they are space saving, and they're easy to move around. They're very stable for when it's very windy, and all in all, have been a big success there. So we see future growth for this in other airports, say in Europe, where they're using lots of de-icing and things like that. So we're very pleased with working with Glasgow there and developing product innovation. And I'll pass back to you, Frida, for the last one.
Thank you. Okay, so this one is case study with Siemens. It's more about product innovation. A contract, the Siemens won a contract award from TfL. This was all during COVID, so it was actually extremely complicated between the Austrian, German entities of Siemens to work in the UK. So I'll come on to that partnership part later, but I suppose the challenge here was LUL have very stringent requirements in terms of smoke and toxicity, and have always insisted on using glass for lighting diffusers, which are heavy and expensive. They've also got, in terms of emergency lighting, traditionally would be bulky battery backup systems within the carriages. So what did we do here? LPA have been working with LUL for a very long time and have got a partnership with LUL over the decades. So we were able to demonstrate how to use polycarbonate diffusers very safely, and which then obviously was lighter and cheaper. So that was a tick in the box. And we managed to get this approved for the very first time with London Underground. And we also, in terms of the battery backup, we built it into specific luminaires, which again reduced cost and the weight as well. So this ability to innovate and work with our customers to make sure that not only are we moving forward in technology, but also reducing their costs as well is absolutely key. Most of this design and prototyping, as I said, was carried out very successfully during COVID, where we were able to prototype and test it together with our customers. And we were really able to support Siemens at these LUL meetings in the UK. So the end result, state-of-the-art LPA constructed lighting system for the Piccadilly line, which is the first line. If you look at it, we are making over 35,000 lights in our factory in the north of the country. And if you line it up end to end, it's about 20 kilometers of light. This is the Piccadilly line. The next will be Bakerloo. Following that will be Central. The conversations have already started with Siemens on, they've said, so LPA, what is your next generation of innovation? How are you going to reduce costs even further? So those conversations are happening over the next couple of weeks, and they'll continue on over the next months. And so that we are working to understand what are their pain points at the moment and how can we actually get the next contract award as well. So again, a good news story in this time, again with partnership, but also in terms of driving innovation with our customers. I suppose at the end of the day, we started off with a revised vision, mission, and purpose for LPA, and that led to a complete rebranding. Who we are, what we're doing, and what we're planning to achieve and aspire to do required a different image, and that's kind of the process that we went through. And hence you'll see that we look and feel, and we're doing it slowly because we didn't want to spend all, it takes time to do it in a more thought out way. And so more things will catch up. At the moment we're working on our websites. We're going to then obviously do the building signs, etc. So progressively, but it's not about the logo. It's really about the values that we have reinstated within the company. It's about accelerating growth with margin accretive solutions. It's really about optimizing our manufacturing capabilities and scalability with a well-integrated supply chain, and we're working towards that. And new ways of working. It is not good enough to work in a silo. It is not good enough to be great at your job but be really terrible in relationships with people. So it's about the right people at the right place. Some we're promoting from within, some we're bringing in new talent from outside, where we feel that there are some key gaps as we sort of move forward as a company. So in summary, let me just touch on a couple of key points. From the last slide, the focus is really about professionalizing our key functions, about being innovative. It's about reducing waste. It's about really improving our operational efficiency, and all about collaboration so that we can deliver, improving our on-time delivery, improving our quality, increasing our pipeline of product innovation. The refinancing is absolutely key. I mean, it was a lot of good work and hard work towards the end of last calendar year. That gives us the ability to diversify and to execute our strategy. We've spoken a bit about rebalancing our revenue mix across markets, across segments, and I would like to think that you will see a lot more announcements and information coming through, not just this year, but as the years continue on as well. I've spoken a bit about our certifications in the previous slide, and this is absolutely key. It gives us a right to enter across many growing sectors and markets, and we will do exactly that. First profitable quarter for FY26, and it's the first time that we've achieved that in 4 years. We're still on the right trajectory, and we're so confident that we're going to deliver full year results for FY26. So really good place that we land in today to actually present this session to you. So I think we're ready for questions now. There are a couple of...
That's great. Thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard. As you can see, we have received a number of questions throughout today's presentation. Can I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Okay.
Yeah, I can take the first question. Shall I read that out? It says, why don't you move manufacturing to a low-cost country and increase margins? So I think that's a good question. I think there's a number of things there. A lot of not all our contracts, but a number of contracts, particularly, for example, the Siemens contract that I mentioned, it needs to be a locally made, it needs to be UK based. And that's one of the reasons we won that contract, because it's a locally manufactured product. It is 30 minutes away from the Gould Siemens factory. Can we make more stuff overseas? Yes, so the idea is to look at what is our USP? What is it that we absolutely need to do in-house, in-country? What is it that we're adding value? And we are going to start looking at that collectively across the group and identify areas of where we can rationalize, and we will do that. The idea is not to move everything overseas. That is not the LPA model at the moment. So, but yeah, absolutely. Operational efficiencies is absolutely key. And offshoring or outsourcing is part of that supply chain exercise that we're actually undertaking right now.
Shall I take the second question? So the second question, how do margin profiles differ between project-led revenues versus recurring product sales, and what does this imply for group margin progression? So I think as is normally typical, margins are stronger in the aftermarket spares sales arena as opposed to initial projects. But if you don't have the initial projects, you don't have the spares and aftermarket afterwards. With us going for more standardized products, we would hope we would get some margin progression there moving forward. Do you want me to take the third one? So the next question, how comfortable are you with current gearing levels, particularly in delayed project environment? So I think our view is that the gearing is okay at the moment. Gearing level is okay, and we expect that to improve, get lower as we are profitable this year and moving forward. Do you want me to take the next one? So I think the next question is, do you need to hold 5 million of real estate? Could you not sell and lease back to release funds? Excellent question. Yes, we've looked at this. We decided that we didn't want to do that. And whilst that might be very beneficial in the short term, longer term, we didn't think that was the right way forward. Hence, we've done the refinancing. Over the next 2 or 3 years, we expect to be generating the cash ourselves in order to repay that, and we'll release some funds from the pension fund. I think that's
great. Thank you guys for addressing all those questions you have from investors. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you their feedback, which is particularly important to the company, Philo, could I please just ask you for a few closing comments?
Yeah, sure. Thanks, you. Thank you all for joining us this afternoon. As I said, feel free to ask further questions. We're happy to answer. And I think for me, LPA is at a really good point and turning point in its journey. It's LPA, next version of it. Huge opportunities around the corner, really energized team internally. And we look for your, we thank you for your support and your commitment over the years or decades, however long you've been there. And if you're a new investor, jump on board. It's going to be a fun future for LPA as we embark on achieving our vision. Thank you very much.
That's great. Thank you both for updating investors today. Now, please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. On behalf of the management team of LPA Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.